It's now December, and we're in the final holiday weeks of the real estate market's annual cycle. Fewer sellers and fewer sales happen each week until after the new year. Inventory will decline until after the new year. This week's data includes some of the Thanksgiving holiday week, so there's a lull. And that lull will continue into next week's data as we squeeze in a couple of weeks before then suddenly it's Christmas, New Year's week. And a little announcement, next Monday, December 8th, I won't be doing this weekly video. Instead, next week on December 11th, we'll be releasing the Compass 2026 Housing Market Forecast and Outlook Report. It's the first time Compass has ever done a detailed research report like this, and we have a lot of great data, analysis, and tools for your real estate strategy in 2026. We cover specifics like home price forecasts and home sales forecasts, and also the big trends that will shape the market next year. So no video on next Monday, December 8th, but we'll do a bunch of work with that 2026 forecast next week, so stay tuned for that. So this week in the data, the story is that home price pressures are continuing to mount. Almost all of the price measures in the active market data are showing negative from last year. That's list prices, it's pending sales prices. This is true whether we're looking at the newly listed cohort or the overall market, whether it's price per square foot or just the asking price. Essentially, all of these measures are coming in less than last year. We've been talking about this imminent possibility for months, but it seems to be reinforcing now. So the measures that track prices on sales, closed transactions at the national level, are still reporting just slightly higher than 2024, so like 1% above last year. But sales price measures are lagging, backward looking. And homes on the market now get an offer in December or January. The sale closes in February. So it might be a few more months before all the headlines agree that nationally home prices are lower now than last year, but it sure seems like that inflection point is coming soon. So I focus on this news because, well, it's not uncommon for home prices to dip from like 1 month to the next or decline in one market as a result of local economic changes. National home prices being lower than a year ago is actually pretty unusual. So it's only happened a couple of times in the last 50 years. So price pressures are on, but at the same time, home sales volumes seem to be picking up. So we're now counting more people buying homes than any November since 2021. So both of these recent trends feed into our forecast for 2026. As I mentioned, that report will be available next week, Thursday, December 11th. So stay tuned for that. All right, let's look at this week's data and see how the end of November wrapped up. So let's start with home prices today. I've been using this illustration of price per square foot recently as an excellent way to see the national price trend that I've been talking about here. So at just under $210 per square foot, the median price for homes this week is almost 2% below last year at this time. So this data is the asking price for homes on the market. These are the homes that will take offers and close over the next few months. So this is a leading indicator for sales that will happen in the future. Notice the slope of the blue line from 2025 is much steeper than the slope of last year's purple line. So this is there's a normal seasonal shape. Home prices climb in the spring and then decline for the second half of the year, and then start climbing again the following spring. In 2025, prices now are moving lower more quickly than last year at this time. It's a stronger than normal seasonal trend. The median price for the newly pending contracts has been averaging about $389,000 recently. That's been just above last November. But in the last 2 weeks, the median price of this weekly cohort, the ones going into contract each week, that cohort, that price has been below last year for 2 weeks in a row now. The homes being purchased were priced slightly above last year until recently, like 1 to 2% higher. But then the last 2 weeks, now the prices came in just slightly under last year. So keep in mind that this is for the whole country. And it is the active market. So this is a market indicator rather than like a specific value indicator. So if what homes cost today, if you walk into the market today, this is what you can buy. And people are buying homes today. They have options that are cheaper than last year. Next week, so we'll share our forecast report with the expectations for home prices in 2026. Will home prices keep falling in 26? How far and how fast? Or can home prices turn around in 26? So these are all things we're tackling in this big forecast report. So tune in next week for that. That asking price per square foot data is a market measure. It's another way to look at prices is to look at the sales price of the same house over time. So that's how the Case-Shiller does it. The Case-Shiller doesn't tell you what's available to buy. It tries to illustrate the house rather than the market. So it's useful, but it takes a lot longer to get to the data. So in the Case-Shiller home price data for September, which is the latest available, home prices are still up by 1.3% nationally. The active market data is now pointed lower, but the sold data from September is still positive. But if you look closer, 11 of the 20 major markets tracked by Case-Shiller are negative already compared to 2024. So by the time Case-Shiller is reporting November or December data, the national market will likely be lower than last year. So in this chart, I have the 20 cities that make up the Case-Shiller National Index. The orange lines are the markets where sales prices are already negative versus last year. The purple lines are still positive. So Tampa is the weakest home price market at negative 5% from last year. Home prices 5% below 2024. Chicago and New York have tight inventory and prices are still climbing year over year, about plus 5% in those cities. The thing to note is the slope for nearly every city is aiming lower. Each month, sales price appreciation is moving lower, basically everywhere. San Francisco is the one exception where prices are still below last year but have turned up recently. So I wanted to share the Case-Shiller home price data today because it fills out this overall home price picture as we wrap up 2025. The reason for these recent downward home price trends is that inventory has grown for 4 years in a row now. There are lots of homes on the market nationally. There are just over 817,000 single-family homes unsold on the market now across the country. That's down 1.5% for the week, which is a normal seasonal decline, of course, here late November. And there are 15.7% more homes on the market now than last year at this time. In this chart, the gray zone is the old normal levels of inventory from the years in the last decade. We are solidly in the normal zone. 2026 will likely continue that inventory growth pattern, though not nearly as much growth as this year. So inventory growth is moderating. And we've been talking about this pattern with inventory for a long time now. So I'll have details of our inventory forecast for 2026 next week in that Compass Outlook report. So here's the fascinating thing. Home prices are down because there's more supply, but home sales are climbing for the same reason. So if you're buying a home, you have more selection, less competition, and better pricing options than you've had in several years. So I'll show you next about these home sales trends that continue to come in ahead of last year. All right, so let's look at the sales data. Even as home prices are lower, that's triggering some buyers to find opportunities they haven't had in many years. And as a result, the weekly pending home sales counts have been averaging 8% more than last year at this time. So we counted 59,000 recent average weekly pending home sales, single-family homes. but for the end of November, and another 12,000 condos. That's compared to only 54,000 a year ago. So 59,000 now, 54,000 a year ago per week. So in fact, there are more sales happening now than in the fall of any of the last 3 years. You got to go back to 2021 before you find a faster sales pace. Reporting this number is surprising to many people. Some these contracts are falling through, of course, so not all of the pendings will be complete sales. But because we've been in this environment of improving mortgage rates, I suspect that the failed contracts are not really spiking or unusual at this moment. So it sure seems to me like this real-time data is pointing to finishing the year strong with improving home sales. Mortgage rates are at their lowest levels of the year, and after a strong bond move last week, they knocked down a little bit further. So one aspect of our 2026 forecast report is that I examine the possibility that home sales will pick up substantially in 26. So could we get a 10% increase in sales next year? Wouldn't that be a surprising change? But we're now in seeing 5 to 8% sales growth. And the spring of 25 was super slow. So could we be in for a big jump in home sales over last year? Well, if that were to happen, what environment creates that growth? To be clear, I don't think that explosive growth is the base case assumption for next year, but I bring it up because I don't think people are talking about it, and it's a real possibility with the momentum we have right now. If we're lucky and we get favorable breaks with mortgage rates, like if inflation cools but jobs hold up well, that Goldilocks scenario could indeed show up in 2026. So stay tuned for that data. And tune in next week when we release the 2026 Compass Housing Market Outlook and Forecast Report. So I'm really looking forward to sharing that with you next week. Stay tuned.